Cryptocurrencies remain to be volatile this week, and there's lots and lots going on. We've got a new president candidacy. We've got Tether depegging during the week. We have possible problems with Curve. We've got DAOs being recognized as entities. We've got BlackRock filing for an ETF. We have Celsius then saying that they're going to sell all their tokens. So let's dive into the market, have a look at the biggest movers and gainers this week, and then we're going to talk about all of the news, what's going on in the market and how this could impact the price before we finish up looking at a Bitcoin chart and seeing where I think things are going to go over the next couple of weeks. So here we are now in CoinGecko, and we can see for the week that Bitcoin is down 4%, Ethereum is down almost 10%, BNB is down almost 8%, and we can see Tether here, as I mentioned, they supposedly lost its peg. It's still 99.8 cents. So it's not really depegged that much, but there could be trouble in the water. So let's move over to the gainers and to the losers. And we can see the big gainers this week. Eth is up 169%. Milady meme coin 46%. Nexa is up 39%. And we've got a couple of others that are also up in the 30%. Looking at the top losers, we've got Manfold down 20%, Jesus Coin down 17%, Diamond Launch down 13%, Hydradex down 13% as well. So the gainers and the losers there balancing out a little bit, where the overall market cap is up today by 2.1%. So that is the market outlook for the previous week. So what's going on in the news that could affect the price? I'm going to talk about Bitcoin at the very end, so do stay tuned until the end of this video. Well, the first bit of news that I want to share today is the new presidential contender, which is Francis Suarez, and he is the mayor of Miami. Now, he is super pro Bitcoin. He took his own salary in Bitcoin. He also launched the Miami coin, which hasn't been extremely successful, but he's definitely pro on the technology itself. So it's great to see a candidate that's up for contender that is actually pro Bitcoin and pro cryptocurrency, because we know what's been going on in the States and all the negative news in terms of regulation and stuff like that. And we're going to talk a little bit more about that when we move on to talking about BlackRock. During the week, we had the numbers out from the Fed and interest rates paused. And even though interest rates paused, the Fed talk after said that they're pausing for the moment, but there could be 2 more further interest rate hikes before the end of the year. And that had a negative impact on the price of Bitcoin. Now, when this happened, we also had news that Tether was depegging. Now, Tether didn't actually depeg that much. If we go back in and we have a look at the Tether chart here for a moment, and I'm going to go over the 7 days, we'd see that it came down to 0.997, and over here it came down to 0.996. So it wasn't even down by a cent. But Tether being such a big company, obviously, this would lead to a little bit of fear happening in the market, and people start selling their Tether tokens on the exchanges. Now, this did lead rise to some FUD around what's going on with Curve, because it was one of the Curve pools that actually depegged, and this brought highlight to some other stuff that's going on. But Tether, the reason this FUD happened was initially that Tether didn't want their reserves data disclosed. But now they have gone ahead and said, look, just go ahead and disclose all the information, and have let the information out. So that's kind of what happened there. If we move on there a little bit, all this Tether news brought highlight to situations on Curve. And what has been uncovered in Curve is that Michael, the founder of Curve, he's the largest borrower against the Curve token on 4 different DeFi protocols. He currently borrows over 100 million in stable coins, despite the fact the Curve has less than 50 million of on-chain activity. Now, this can be quite concerning, because if he were to get liquidated, somebody is going to be left holding the bag. So how has this actually happened? Well, if we scroll down a little bit, We can see that this month his collateral secured almost 45 million in debt, consisting of 36 million in USDC borrowed from Aave, 8 million borrowed from Frax as well. As of the 15th of June, his position stands at 170 million Curve for 62 million Tether, 46 million Curve for 20 million, 27 million Curve for 12, and Inverse Finance, he's got 15 million for 6 million of that stablecoin that they have. So basically, anywhere that he could use Curve as collateral, he's doing it, and he's borrowed quite a lot of money. And we can see that since April 23, he's actually sent 32 million out of the exchanges into probably his own wallet. So, you know, he's got an awful lot secured, but if the price were to go down, and it does say if the price were to go down to about 26 cents here, that he could be liquidated, and this could have a huge, massive knock-on effect for all of the lending protocols, because like I said, somebody is going to be left holding the bag, and this can be quite concerning. So I'd love to hear off you, and do comment below. Do you think his positions are too big for DeFi? Moving on now a little bit more. Oki Decentralized Organization have had a court case, and this court case has deemed that as a DAO, that basically they can't say that they're autonomous and that nobody has any say in what's going on. So there was basically a legal judgment against the DAO, whose members are often anonymous and informally organised. So on Thursday, the judge ordered that this DAO, which was sued by the CFTC, had to pay a fine of 463,000. He also approved for the CFTC's request for an order to take down the websites according with the group and any apps that it builds on as well. So this is really quite important at the moment, because this is a case against DAOs, and DAOs are generally a collection of individuals who hold some form of equity in the protocol at issue, usually by buying the token. The level of transparency around their identity can vary, lawyers say, depending on how the DAO is structured and set up. So look, people can't, basically what they're saying is you can't mask a company under a DAO. If it's a company, it's a company, and it needs to be registered as a company. And this case sets precedent for all of that. Now, big headlines in the news yesterday and today is that BlackRock were filing for the ETF, the spot Bitcoin ETF. Now, why is this big news? Well, there's so much going on with the SEC at the moment, and the SEC, as you know, are suing Coinbase, they are suing Binance, they have the case against Ripple going on. There's just so much going on, and there's no regulatory framework, and there's no kind of guidance out there for everybody. But BlackRock are this massive, massive, massive player in the US and around the world, and I'm sure they can pull quite a lot of strings with Congress because they are that big. Maybe Gensler is going to go ahead now and approve this just to show that he is not biased, he's not against Bitcoin. But the reality is he actually doing it for that reason, or is he doing it for other reasons? We see Operation Chokehold going on, and there is a tweet here at the moment from Andrew AP Abacus, and if you're scoring at home, here's what it says. Operation Choke Point. So what happened? They cut off liquidity to exchanges. They closed down the banks that were involved, so people can't get liquidity onto the blockchains. They then sued Gemini, Coinbase, Binance, Kraken. They shut Silvergate and Signature Bank. And now all of a sudden, BlackRock files for a Bitcoin ETF. Now, BlackRock are already heavily involved in Bitcoin. BlackRock actually own, and if we go to the MicroStrategy class shares to see who owns them, we see that BlackRock is already owning 8% of MicroStrategy shares. So they're already in there. So are they trying to, in America, make it so, like looking back to when they stopped people being able to hold gold and they took gold for themselves to prop up the currency and whatever. Are they doing the same with crypto? Or am I just, reading into this a little bit too much? But it all seems a little bit peculiar to me that they're making it not really easy for the normal person to be able to access crypto, to be able to buy crypto, and to be able to profit off crypto and basically redistribute the wealth around the world. Are they making it so that you have to be an accredited investor, that you have to be able to buy through BlackRock and all these JP Morgan, all these larger people, and these are the people you'll have to buy Bitcoin and cryptocurrencies from, getting rid of all these smaller people that, have been making a living from all of this? It's really quite scary when you think about that this sort of play could actually be underway. And it may have been underway for a number of years, a larger plan like this underway for quite a number of years. So it's going to be really interesting to see how this all plays out in the States. But meanwhile, China and Hong Kong are welcoming crypto companies. They're putting pressure on banks for them to deal with cryptocurrency companies. And they're definitely trying to capitalize on this fear that's going around in the US at the moment. And then don't forget, in Europe, we've got MICA, and we're also welcoming crypto companies to Europe. Jumping on a little bit more now, there is also news about Celsius and Celsius swapping altcoins for Bitcoin and Ether, and will be doing any repayments to creditors using Bitcoin and Ether. If this story does show up to be actually true, altcoins have already been suffering quite a lot. Bitcoin dominance has been doing really well. Bitcoin dominance is still climbing. This is just going to put further pressure on altcoins and allow for Bitcoin dominance and even ETH dominance to grow a little more. So if you're holding altcoins, be careful, keep an eye on the market. Maybe it's not a great time to be holding altcoins, but obviously I can't give financial advice. I can just let you know what it is that I'm doing. Now, with all of that news going on, I'm going to take a quick look at the Bitcoin chart. And the Bitcoin chart that I have open here is the daily chart. And I have a 50-day moving average here. And I also have this trend line intact that's been intact all the way back since January. And we managed to touch down off it and bounce off it. It's going to be interesting to see if we actually bounce back up to the 50-day moving average and then roll over. But look what's been happening. We've been creating lower highs, lower high, lower high, lower high. And we've been creating lower lows, lower lows, lower lows, lower lows, all since the middle of April. Now, the summer months do tend to be quiet. This year in particular, I have said it time and time again, this is a year that both the bulls and the bears will get wrecked. We're not going to see new all-time highs this year. And if we do, I will be super surprised. So I can easily see the market ranging down, even down to this 20,000, maybe a bit lower, going back up to 30,000, ranging down again throughout the rest of this year. Now I'm going to switch this chart from the daily to the weekly chart. So you can see on the weekly chart, on the 50-week moving average, we're still above the 50-week moving average. And if we were to come down and test this, you're looking at about 23,000 on a test for this. But what I want to do is pull up an indicator, and this indicator is the whole indicator. And we can see on the weekly that we are still in green on the weekly whole indicator for Bitcoin, which is quite positive. But if we look at any of the altcoins, and I'm just picking some of the random altcoins here, we can see that we're starting to go into red and come down. What tends to happen is once we drop below this green whole line, and we can see it in the past, once we drop below it, we tend to take a big dip below it. That's the Ethereum chart. If we go back to the Bitcoin chart, we can see we came down, came out of it, went back up, tested it, and whoosh, right down. Again, the same thing here. As soon as we came under it back in November 21, we've really stayed under it all the way until September 22. Now, if we look at this on a daily, and I wouldn't look at this on any other time frame shorter than a daily time frame, because I don't think it gives a good reflection after that. But we can see again in the daily time frame that this whole average is in the red and that we are below it. Now, with all of that news coming out, if BlackRock gets the go ahead for this ETF, last time we had an ETF was at the bottom of the market and it actually crashed the market. We have the fear going on with the Curve protocol. We've got DAOs out there that are being declared companies. We have further interest rates hikes coming this year. So look, really do just be careful out there in the crypto market. It is going to remain choppy for the rest of this year. Now, if you did enjoy this video, I hope that you will subscribe to my channel and smash that like button so you don't miss any more of my videos. And I'll be back next week with another update and roundup of the weekly news. Take it easy. Goodbye now.